But it's not your company; it's my company.
Yeah. Oh, yeah, it is. You're right.
But
If I may,
Yeah.
just on Discovery,
Mm.
whose call is that?
My
Or
call.
is it a joint?
No,
joint
it was
call?
my
It was
call.
his call, but I
And can I
understood the
just
rationale.
can I
Yeah.
just what is your sort of
Investment
views?
case.
Yeah, your investment case for Discovery.
So my investment case was that the Discovery Bank is undervalued by the market. It's not really reflected on the share price. So I think in terms of growing that bank, we can still see a lot of value unlock in terms of target. That was literally the thing, and also just from it's still founder led, right?
Yeah.
Hello, investors. Welcome to episode 13, right?
13.
Yeah, of the Investment Candle podcast. My name is Chifiwa, and I'm not rolling alone again.
Yeah.
I'm rolling with the tech guy, the guy that has made billions and millions on Sasso.
You know. Yeah, man.
How are you doing, my man?
I am well. I'm well. And as you said, you're not alone. I'm also not alone. Things have changed.
Things have changed.
But
We've
I'm
got
good.
our first guest today.
Hey.
Yeah. Her name is Boitumelo. I think we'll talk a little bit about her long 50-page CV in a few of the things that she has achieved in the space and stuff like that, and how she's moved. But her name is Boitumelo, and yeah, do you want to say hi to the investors?
Hi guys. Hi.
Yeah,
Thanks
how are you
for having
feeling?
me.
How are you feeling to be here?
I'm anxiously nervous.
Is it?
Or anxiously excited. Yeah.
No,
So,
but I mean, it's a very chilled podcast.
Have
We
fun.
don't talk serious things, you know. We talk very social things.
I
But
hope it's a little bit serious.
I mean, look, the discussion itself, it can be serious, but the
Yeah.
delivery, it's social, you know.
Exactly.
Yeah, but nonetheless, man, I think we can start with the portfolio check.
With the portfolio check.
It looked a little bit red.
You're not wrong. So yeah, thank you so much. I'm keen to get the conversation going with Boitumelo. But before we get there, let's deal with the portfolio check. Our portfolio is not looking great.
Don't look at me. I mean, I'm not the only one that has made the decisions.
It's not looking great. But I don't know. Just to summarize it, our top performers are performing even better, and our non-performers
are getting worse.
are getting. This is sort of stagnation, because even in the non-performers, there is some stability. But yeah, let's just get straight into it. So we have number 7, which is last, unfortunately. Number 7, we have my company, Naspers with negative 8.34%. Naspers. And then number 6, we have British and American Tobacco.
Yeah.
British and American
And I
Tobacco.
think we've chatted a little bit about the rationale behind not selling it and keeping it long.
Have your convictions changed?
No, nothing has changed for
Nothing
me
has
on my
changed.
side. I think it's still a long-term game for me. I still very much bullish on the turnaround. I mean, it's a space where there's a lot that is changing, right? The regulation.
Yeah.
There's a lot that is happening in the market. So I think they've got historically they've got quite a good success turnaround in terms of change of navigating around this tough market. So I don't think that has changed on my end.
Cool. Number 5, we have Discovery with negative 7.46%.
Yeah.
No comments on my side on Discovery. I'm saving my comment for Sun International.
But it's not your company; it's my company.
Yeah. Oh, yeah, it is. You're right.
But
if I may,
Yeah.
just on Discovery, whose call is that?
My
Or
call.
is it a joint?
No,
joint
it was
call?
my
it was
call.
his call, but I
And
understood the rationale.
Can I
Yeah.
what is your sort of
investment case.
Yeah, your investment case for Discovery.
So my investment case was that the Discovery Bank is undervalued by the market. It's not really reflected on the share price. So I think in terms of growing that bank, we can still see a lot of value unlock in terms of target. That was literally the thing, and also just from it's still founder led, right?
Yeah.
So there's still a lot of entrepreneurial spirit in the business, and also very innovative business, right? And the expansion into Europe and China, that can still drive a lot of value.
Yeah. I think a lot of people's arguments against Discovery, or not against, but or particularly the bank, is that like almost everybody, not everybody, but if you have a Discovery product, whatever it is, insurance, vitality, most likely you've got a bank account because you've been forced to, because that's how you get all the travel benefits.
Sure.
Yeah.
So it's nobody's primary banking, or it's not most people's primary
Bank.
because well, I just use it for my, So like do you see that changing? That I don't know, in 2-3 years, most of the bank accounts are actually private, or actually their primary. I think that's the thing. Like if people aren't transacting on a day-to-day, it's hard to argue that it should be valued as a bank.
As a bank separately. No, I think
Yeah, Boitumelo has arrived. She has arrived.
no, I think this is quite a key question, right? I mean, given the network effect that Discovery has, it's got a lot of very big user base from the insurance business.
Correct.
So there's a lot of cross sell that is happening, like you mentioned, right? But in terms of growing that user base beyond that, I do believe that they're able to do that.
Yeah.
Just like I said, this is a business that has a lot of entrepreneurial mindset to actually drive the growth. I mean, we've seen a lot of business that they've started from scratch, right? And I don't think this is any different.
Yeah.
So from that, I think they probably will be able to deliver in terms of.
No, I mean, I'm like a staunch Discovery user. Everything is Discovery. So
Even the bank.
Yeah.
No, I just have it for the purposes of getting the points.
For the purposes of benefits as well.
Sure. I also use
It's
Discovery
like
Bank
Apple
as well.
products, right? I mean, once you get into the ecosystem, you're literally going to get everything from a watch, laptop, whatever that you need to do.
Yeah.
And I think
They've got
that can also be a good thing,
100%.
Yeah.
Epic. That's Discovery. So after Discovery, we have Anglo Platinum. We have spoken about Anglo Platinum to death.
Quite a
about
lot.
it. So for those who want to actually see that,
It was my company.
it was Chifiwa's company. That comes in at negative 5.96%. Then we get to the top three. I think we know what's number one and number two. Number three is Sun International with negative 1.75. And with Sun International, my brief comments, or rather what has struck me the most, it transpired within the past 2 weeks or so, and that SA Tourism, South African Tourism, recently appointed a permanent CEO and established a board of directors. And why that's significant, in my view, was that, well, the purpose of South African tourism, it plays a fundamental role in visitors that come to South Africa and actually stay in these hotels.
Yeah.
And with SA Tourism, they've been acting leadership roles. I mean, like, there's so much acting, one would think it's Hollywood. You get what I'm saying? It's like a lot of acting this, acting that, and you don't have stability.
Yeah.
And just for investors out there, so the mandate of the South African tourism is to basically market South Africa as the primary investment, vacationing or visiting destination. And we've had so much instability. And with Sun International, here is my selling point of Sun International. It's purely on South Africa's position, or rather the tourism position and the role and the contribution it plays on the larger GDP. As it stands, the tourism contribution to GDP is about 3.2% per Stats SA, 3.2%. This is after COVID. Before COVID, it was at about 6.4%. In its highest, it was at about 8%. This number will continue to grow because of the rebound from COVID as In fact, we're saying it now, but like, it feels like COVID is a thing that happened a long time ago, but it happened a few,
Yeah.
recently. So I think that as we grow and as the contribution of South African tourism plays out, I think it's going to double. I think the
And
contribution is going to double.
do you have a sense of what happened from a summer holiday perspective that we just had? Like how the hotels, have they released any trading statements with regards to that?
I'm waiting for those numbers. Even before
Okay.
I get to the individual, I wanted just to see I look at Stats SA first. I would like to see how many people arrived in South Africa so that I can see whether the hotel industry has captured, how big was that capturing of that market of those visitors. But in essence, I mean, our economy is at about $400 billion GDP and 3%, which I think that's going to double. And I think Sun International is best placed to capture a lot of that growth. Last year, they purchased the Piedmont Group for about 7.3
Well, they're
billion.
still trying to.
They're still trying to.
Yeah, it's not
It's not inked.
It's not yet. Yeah, it's not yet set in stone.
But I think like a deal
What's the company?
Piedmont.
Piedmont. It's the group that owns Empress Palace
Yes,
in
correct.
Joburg.
Yeah. But I think even
I
more
just
so.
always thought it was part of Sun International.
No. They're trying to push a deal through to acquire the entire business. But I think even more important about that peer group is it is important that they are getting 11 new properties into their portfolio. But it's the betting platform, Palace Bets.
I was about to
think
ask about that.
is going to be amazing. And I think Sun International. I think Sun International.
I disagree.
Is best placed.
What's your view?
What's your view?
Do you think the online betting market is not that lucrative?
No, I think it is.
Or do you think fundamentally the platform that he's talking about is just leakage, has some leakages?
Yes. So I 100% think that like the online betting and the online casino games, like that's the next big thing.
Yeah.
And
Yeah.
when you're talking about casinos, gambling, that's the type of like growth you should be trying to acquire.
Sure.
I think Sun International has a pretty good online offering with
Yeah.
their Sunbet. I think it's like done
It's strong, it's
done
robust.
very well. Yeah, and it's like if you see the stats, it's also one of the like the most downloaded and stuff like that.
Is it the platform called Sunbet?
Sunbet, yeah.
Sunbet, yeah.
Okay, I don't gamble. That's why.
I mean, I also don't gamble. I also
me
don't
neither.
gamble, but
I
like,
don't understand
we're
that
informed
market
investors,
that
aren't we
much.
not?
Yeah. So and I think Sunbet is better than
Palace
Bet.
Bets. Yeah.
Just I mean, I'm not a gambler either. This is just from my analysis as an investor, as an equity analyst. Sunbet is profitable, Palace Bet isn't. So I think in 2024 to be acquiring like a land-based casino, I don't think is the best. I would rather you buy or you really focus into like investing in like an online offering.
But I'm not quite sure what you're disagreeing about, because like I'm saying that the addition of Palace Bets, I think this is about market share. If you have Sunbet, which is robust, I agree with you. It's one of the main points it's what underpins a big part of my investment case.
Yeah.
And then buying Palace Bets as well. I think it's about getting as many users as you possibly can. Yeah, so that's the
100%,
bet side.
Fair
And
enough,
then-
but I think our point was more towards the land-based.
They live in
Because then
properties.
that comes with fixed costs. You need to achieve
No,
certain
you're quite
targets to
right.
actually achieve that break even margin and all those things. So I think even me, I as an investor, I would also lean towards acquiring growth on online platform. You've
Yeah.
got less cost there, and you're more likely to grow your user base faster than if you actually have a land-based platform. But nonetheless, I think given the experience that they have, there are potentially some synergies that they're actually thinking
Sure.
of leveraging on the different platforms that they have.
I agree.
Yeah.
And my parting shot on Sun International before we get into our top two is that this new CEO, her name is...
There's a new CEO on
new
Sun
CEO.
International.
Yeah, so not Sun International, South African Tourism, sorry.
Oh,
Which
okay.
it feeds into,
Yeah.
which feeds into directly or indirectly into Sun International is Nombulelo Mbulelo is her name. I forget her surname. Is Guliwe. Yeah, so she is the new CEO of South African tourism. I think it's a win for all the operators in the
Does she
tourism
also
space.
have a PhD from LSE?
My way, you went there. You went there.
Oh my god.
Okay,
you
too soon,
went there.
Too soon,
Yes.
too soon.
Yo, this guy went there. But
Too
anyway,
soon, too
no.
soon.
So she is a chartered accountant.
Yeah.
Yeah, I'm sure you guys are celebrating about that. She started, well, her articles were done in PwC, and she's been at this firm for 30. She's been at South African tourism for 13 years. So they're getting someone, and the market actually welcomed the news and establishment of a board. So hey, more power to her. And she's from UJ. I studied at UJ, so I guess maybe there's that little bit of a bias. I
Right,
really.
right.
I mean, at the stage we're speaking about qualifications. I hope everything is okay there. But yeah, that's Sun International.
Yeah.
Top 2. ShopRite, number 2.
I mean, that's a beast, man. I mean, I praise ShopRite a lot. You know, if you
speak
listen to
about
this,
ShopRite a lot.
No, I agree. I think
it's just a
lot.
fantastic, well-run
very,
business.
very good business.
It's a
Awesome.
very good business.
I
I mean,
agree.
once you get into ShopRite, I mean, look, man.
I agree.
It's one of those, like I always mention it, that it's one of those companies that you could keep forever. I think. For me.
Well, I mean, look,
Yeah.
the timings, of course. I mean, you have to realize some value at some point, right? I mean, if the share price, for me, if the share price of ShopRite goes to like 260 towards 280, that's
Yeah.
when I'm like, okay, I need to trim a little bit,
Yes.
right? And then if it's like below 200, I know I need to get it, right?
There's a few.
But obviously, just from a business case perspective, ShopRite is just a well-run business.
It's brilliant.
I think in terms of being a retail, if you want to look at the success for a retailer, you need to look at ShopRite. Yeah.
No, well said. Number 1, okay, no, ShopRite, positive 14.98%. Green. And then number 1, we have Capitec. That's my company. Capitec
I
with
agree.
plus 31.9%. Oh, man.
Wow.
And the Capitec machine just rolls on.
Yeah.
Just
Yeah.
keeps
To
on
roll
rolling.
on. Yeah, so that is the portfolio check. Investors, we're keen to hear your comments on our portfolio, on the performance of our portfolio. Any adjustments?
What's the overall? Do you have the overall?
I don't have the overall number, but I'll get it before this comes out. and
It's
I'll
gonna
place
be
it here.
negative anyway, so it saves us the embarrassment.
What is the over what time period is this that you're quoting? How long has this portfolio been
months?
running?
It's been how many months? Six months,
6 months.
probably now.
Yeah.
Oh,
Yeah.
that's very good.
Yeah,
so
very
6
good.
months.
But I mean, as of December, I think we were on the positive.
Yeah, we were.
Yeah.
Yeah.
But then, I mean, I feel like there's just some sort of a market reversal when you move into the new period of some sort. I don't know how it works, but
I think what stands out for me, like as you're reading the names of your portfolios, and I think that's like a very important part of investing is like the benefit of diversifying.
Diversification.
Sure.
And you've got your ShopRite and Capitec, which are doing very, very well, but you've got the other names which are detractors at the moment. But like in a
different
following
industry.
6-month period,
Yeah.
like things may be different, but
Yeah.
like the effect on your overall portfolio may still be positive. I think it probably still is.
It is. Barely.
Barely.
Yeah.
right?
So
Yeah.
so that was good.
No,
Yeah.
fantastic.
Portfolio.
No, it makes sense. I think one of the things that we've discussed quite extensively about is the importance of diversification,
Yeah.
right? That's one element that we had thought about quite a lot. What we did when we constructed the portfolio was that Hugo came with his 3 stocks initially. I came with my 3 stocks, and then we like, okay, how does this look from a diversification perspective, right? How, are we capturing the industries that we need to diversify? What's the risk that we're trying to kind of manage in that perspective? So. Yeah, that was some of the discussions that we had on the screen.
Yeah, that's good.
Yeah. That's a portfolio check.
Yeah. Well, I think we can delve into some of the elements. I think now that we've got a guest today, it will be good to kind of hear how you invest personally. But before we get there, I think it would be good to know who you are.
Yeah.
Right? I mean, people are just wondering probably like, who's this person coming with great insights and
Yeah.
Already challenging us,
and challenging us on our
It's amazing. We love
on our
it.
things.
It's all
you know?
love. It's all
No,
love.
we love it. We absolutely we do it. We do it
all
for
love.
this. Yeah.
Yeah.
I'm Boitumelo, as Chief said at the beginning. I don't know what
What do you do?
What more is
Like,
there to
what do you
say?
do on a daily
I'm
basis?
an equity analyst, so in the asset management industry. I've been an analyst for it's like 3 or 4 years now.
Cool.
Before that, I was doing my CA articles. And
But in the asset management space.
in the asset management
So you've lived and
space.
breathed
Wait,
the
so you did your articles in the asset management?
Yeah.
Yes,
Oh,
yeah,
awesome.
yeah. Because you can now do like you don't have to. You can do articles in a bank and wherever really.
What is it again? Tip top.
Yeah,
Yeah.
out of public practice or something like that. Anyway, but I guess it's really different when you're doing your articles because you're not really like in an investment team. You like
True.
in finance teams and you
and there's specific competencies that you need to
competencies.
get,
Yeah,
right?
you need to do tax, you need to do risk,
yeah.
you need to do
Sure.
so audit. So it's really in the last maybe I'd say 3 years, 3.5 years that I've really like been in the market. I would say.
Awesome.
Yeah. What else? Oh, I got my CFA recently.
Oh,
Yup.
wonderful.
So that's me professionally,
More credibility,
I guess. Yeah.
eh?
Yeah, if that counts for anything.
What do you mean? The CFA program does count for anything?
Have you changed your LinkedIn name?
Oh, yes. Immediately.
to actually reflect. I mean,
was
look, that was a
listen,
hard work.
That
eh?
is probably like top 1 reason of doing a CFA, okay? So you can double
LinkedIn.
barrel for the LinkedIn.
the CA and the CFA.
No, but I
Nice.
mean, every sort of CFA results season, you always get like people writing articles about how it's not worth it. The
Yeah.
qualification is not worth it. It's so expensive.
Yeah.
They make it so difficult. That
Yeah.
this, that, and the other. So yeah. But anyway, that's not today's conversation.
I've got a
Yeah.
question. So before you entered investment in the professional sense, what was your first run into investments?
Honestly,
Yeah.
like up until maybe I was in my articles.
Yeah,
I
yeah.
had never like bought a share. I had never invested in that sense. Like growing up, if you had extra money, you put it in the bank, you know. I'd say probably like in varsity was when I learned about the stock market and like when you do the finance courses or whatever. That's really where I got introduced to investing. But even then, it was just something you learned in varsity.
Was theoretical.
It wasn't, exactly.
Very
Yeah,
theoretical.
yeah.
Did you do the JSE investment challenge when we were in varsity?
No.
You didn't?
No.
I did that thing. I was so
I also
obsessed.
did
Oh, that's
also
cute.
did
That's
it.
great.
So obsessed.
I
also
didn't
did
know. I didn't even know. That's
I was
great.
so obsessed with that thing. I remember, I think we did it in final. I did it in final year. And then I did it again in my honors year.
And what did you have to do?
So we basically we did it in teams. I'm not sure if
Yes,
the structure
it's
has
the
changed
same
now.
thing because it
It's
was
the
an
same structure.
inter-varsity
Okay.
competition.
Correct, yeah.
Yeah.
So we basically get into teams and we build a portfolio.
Oh, okay.
And whoever wins, our team didn't win.
What do you win based off of the portfolio's performance?
Yes, the
Yeah.
portfolio's performance
Over
a period of time. I can't remember. This was a
Okay.
long time. We're not that old, but
no, we are. We are.
Third year, yeah.
yeah, like that was a long time ago. But I think it was it was a defined period. And also, so they give you like notional money,
Yeah,
of course.
yeah.
And then you
It
invest
was about
in-
100,000 rand.
Okay.
Yeah.
And then you invest in there, and then obviously you could sell and
Okay.
buy
Okay,
and
okay.
add more or
and manage it,
trim
yeah.
and like
Correct.
basically
Yeah.
just
That's
manage
it,
it.
yeah.
Yeah.
I think that's where my interest in investment kind of peaked.
Sure, that's very useful.
Because I was just like, I want to do this for a living.
That is great. Oh my, what was I doing in varsity?
You were chowing cars.
My goodness. Jeez, man.
Oh, epic.
Yeah.
interesting.
No, I mean that's quite interesting. If only the interest of investment only started. I think many people can echo this that we only started knowing about investment when
Yeah.
we go to varsity
Yeah.
and all of
Yeah.
that. But now do you invest personally or you just
Yeah.
invest on behalf of other people?
No, I do invest personally. Obviously, it's a little bit difficult when you work in the industry and you're an analyst,
Yeah.
because like the client comes first. So if the firm is active anyway in any stock, you can't
buy.
obviously you can't until the firm is finished, obviously. So
Gee whiz.
yeah, I mean, obviously the client has to come first. Like,
Yes,
you can't 100%. So
And if you see, I mean, back in the company that I used to work in, if you see an opportunity in terms of, you can enter into that company because the stock is undervalued based on your analysis. You
Yeah.
can't just go and make that decision.
Yeah.
You have to present it first to
Yeah.
the company.
Yeah.
Goodness gracious.
And
You guys
then-
are schooling me. I know I've never worked in asset management.
yeah.
And I would have an issue with
So
that.
so so you'd be interested in a particular trade.
Yeah.
The firm is still
Takes
active.
precedence.
So only once the firm is finished can you begin to trade. In that, and if the opportunity is still there, sometimes it's not, and then well,
It's not.
it's not. You try again next time. But yeah, when I
weird
get an
that.
opportunity, I do. Yeah.
Do you have?
definitely.
Do you want to tell us a little bit about the companies that you have in your portfolio?
Yeah, some of them we probably share.
With the-
share with your,
Because I mean,
with your
with
portfolio.
if it's a good company,
Yeah. It's a good
it's
company.
what the market perceives it at, right?
So I've got Capitec.
Let me
Capitec?
guess. You've got Capitec. Most likely have Shoprite.
Yes.
Most likely have Naspers.
I don't.
You don't
Not
have
anymore.
I don't. That's just as a consequence of not having had an opportunity to enter because of
Okay.
exactly
It
because
makes
we
sense.
were always
Interesting. Interesting.
Yeah.
My last one probably would be one of the mining companies.
I don't.
You don't have a minor.
You don't have
I don't. I think I like. So I cover industrials, just professionally industrial space, car like dealerships, etc., hotels, casinos, restaurants, paper packaging. So I just don't feel like I've got the skill to make a decision on
mining.
like a resource exactly. So whatever exposure I want in resources, I get it through investing in like the company's unit trusts.
Sure.
That's just what I do. So I've got Shoprite, I've got Capitec, I've got ABSA, I've got Standard Bank. So
You've got
clearly I
ABSA
love
and
the
Standard
banks.
Bank.
Yes, I've got ABSA and Standard Bank. Not all of them are working out at the same time. I've got Foschini.
The Foschini Group, right?
Yep, I've got the Foschini Group. Let me actually check.
Yeah.
The Foschini Group. I
Yeah.
covered
Yes.
Foschini Group in my previous life.
Yeah.
And I was not so impressed with the outside of South Africa growth.
Yeah. Yeah.
Yeah.
Yeah.
But I think I've got some questions on the portfolio. I'm
And
keen.
Richmond is the
Richmond.
Richmond as
He's
well.
a big
I'm a
fan
fan.
of Richmond. Like
Yes.
a
I'm a
fan.
very big fan
I'm a
of
fan.
Richmond.
I'm a fan of Richmond.
Yeah.
So okay, wait. I've got a question though. You said you've got both ABSA and
Yes.
Standard Bank.
Yes.
Can you just tell us a little bit as to why did you go for both?
So at the time that I purchased both, I thought the valuations were way below sort of what the fair value is.
Yeah.
And I thought they're both like very good businesses. Like
Yeah.
I love Standard Bank. The African exposure is like the different feature with Standard Bank versus ABSA.
Yeah.
So I think, and that's paid off quite a bit.
Fantastic.
And I think ABSA was just grossly undervalued. And so for me, like ABSA is a valuation call. And
True.
when I feel like it's at the fair value or when I've made whatever that I need to make, I'll sell out. I think Standard Bank is one that'll probably be like a permanent feature of my portfolio.
Is it because you
with
see some
Capitec.
growth in Africa?
100%, and it just feels like as opposed to and I'm by no means an analyst in banking, right?
Financials.
But like absolutely not. But as opposed to like consumer names and having Shoprite in Africa or having I don't know clothing in Africa or whatever, like there's just a lot more regulation and
Yes.
caution in banking in Africa, such that it would be extremely difficult or just rare for something to go materially wrong that like would
Would be
eliminate that
fundamental, yeah.
like that would hurt the whole group Yeah. So that's
That
that's
will
just my
necessitate
view.
an exit in certain
Yeah,
countries.
exactly.
I mean,
yeah.
we do have precedents when banks kind of exit
Leave,
Yeah.
countries,
Yeah,
though.
yeah,
You
do.
know,
True, yeah.
but I mean, maybe just sticking on the banking side. What do you guys make of? Because what I've been seeing, especially on the retailer side, right, is that there's been a move of a retailer acting as a bank. Like, for instance, recently ShopRite about their money market accounts. You save on fees, you don't pay fees, but you can transact on that account. I mean,
Yes.
how much of a threat is that to banking? I mean, we've seen a lot of threats
Yeah.
towards the financial services or the traditional financial services with fintech and all of the likes, but then I feel like everyone is trying to become a bank. Vodacom as well, MTN, they've got
Quite
their
right.
financial, their fintech
right.
features that are coming into that. And that's one of the things that discussions we've been having online, that once you have that network effect, right, that you've got the customer base that you can leverage off of and to pretty much cross-sell with all the different products that you're developing.
Correct.
What do you guys think, how much that is a threat to the banking sector?
Yeah.
So for me, what you're saying is correct. It's something that I've observed as well. And I think it is a fact of life. It's reality of which the banks must get comfortable in that almost any business, as long as if you have some sort of payments, which every business does, you need to get paid, and you've got a solid user base, there is a possibility for you to perform bank-like activities. Not necessarily operate as a bank, obviously, because of regulation, because of you have to apply for a banking license and you can't really have accounts, savings accounts and all that. But the thing of money movement, which underpins banking activities, and as long as if there's that in mass, then I think that's always going to be a threat, especially in the payment space, especially these fintechs, which have kind of almost woken up early and stole big banks' breakfasts. But I think this is something which the banks themselves, how they can actually react to something like this, it's not organic. I don't think they're going to be able to. They're too big, especially the big legacy banks, the standard banks, the apps. It's too big. But they can actually do it inorganic by actually purchasing a lot of these fintechs.
And they've got the financial muscle to do so.
Yeah.
Right?
They can do so. They can do so. Yeah.
But I
And
mean,
think
from a competition perspective, is that not against those rules? Because then you're taking away the kind of choice for a customer to go either way, right? I mean, the more competition is there, the more choices I have as a customer, right? So is that kind of ethical in a way to kind of, buy out all your competition?
Please use the word ethical.
No, I said.
Yeah.
But I mean, yeah. If it's against the spirit of competition, if you're buying against the spirit of competition, then you're taking away the right from a customer. But I think I interrupted you when you wanted to say something.
Yeah, so I think like you're 100% correct that the whole like the network effects and the fact that like ShopRite or whomever has a huge user base and they can capitalize and benefit from that. But like the banking license and the regulations around banks.
Yeah.
I think that's the moat. That is the competitive advantage
Agreed.
of a bank. Like they'll always feature, and you'll find a lot of these fintech or financial offerings that retail stores do, or the cellular networks do, will be in association with, or they will leverage off of the
True.
banking capabilities of one of the big banks.
Yeah,
So
true.
I think, I don't think it's a like an existential threat for the banking industry. I think there'll always be a need for banks, of
course.
and competitively, like this is commerce, man. It's all about profits, right? Like, and for the Competition Commission is unlikely to disallow something like that just because probably the fintech offering of a ShopRite or whoever is probably like such a small part of the market that they don't see it as like market moving or really altering the market. It's not like I don't know, Absa going and buying Capitec or whatever.
Yeah,
Capitec
exactly.
going,
No,
yeah,
right.
That's a different conversation.
Yeah, but I mean,
I think I was going to say that. So sorry to cut you, mate.
Yeah.
I think what you said is quite right in that I think a lot of these fintechs, they're not banks. You know, they can supplement how a bank actually runs, as far as quicker payments, more agile, that type of thing. But as far as taking money, opening up a deposit, taking that, holding it, and giving it back to you at a higher interest, I think it's bread and butter, and that's not what these fintechs do.
I mean, look, I don't know the regulation around things like digital wallet where you can put your money and stuff like that, right? I mean, those are also alternatives, right? That you can
100%.
potentially use
Quite
to,
right, yeah.
to typical banks. But I think on your point on competition commission, right? I think maybe in terms of looking at this, because if you can allow banks to kind of consolidate all the smaller players, then you literally have this one huge part of like creating a monopoly of some sort, right? So perhaps how they can also look at it is, how can this thing actually grow? Does it have the capacity or the possibility to actually grow to be an equal competitor in that sense, right? But if you're consolidating them at a very early stage and you consolidate multiple of them, means that you're most likely going to grow to be a kind of a monopoly. We already have some sort of a monopoly in banking because there's like a very few players. Like
So more cartels.
yeah,
than
like it's
monopoly.
like it's oligopoly, whatever it is. I mean, I
yeah.
did course a very long time a very long time ago,
Yeah.
right? So
Yeah.
I think that's my point, that if Competition Commission is listening to the podcast, you know, I'm saying they should not just look at where the player is at currently, but also the potential future things in the market, if that's not what they're
I hope
looking
they don't. I really hope they don't. I think that's when you now get to the point where you get regulation overreach.
Yeah.
Because what you're asking is too forward thinking and it's too proactive by a regulator.
And also you want, like, if I'm a entrepreneur and I have, you know, started this business and I want Capitec to buy me, I should be able to sell my business to Capitec.
100%.
Because
I agree.
maybe you know what I mean?
Agree.
No,
So,
fair
yeah.
enough. I think from my perspective, it was not like don't approve this kind of deal flow. It was from at least don't allow such major consolidation, right? Like they can't go on a acquisition spree without being regulated in that sense. That's just my
No.
Unfortunately, that's not how it works.
Right.
Unfortunately, that's not how it works.
No,
Yeah.
bro.
Yeah.
because I mean, look, it's for me, because we end up with one big player that has its own way of doing
We
things.
don't have one big player.
But
We've got a few.
But also, like, if you've been smart enough to see smaller businesses coming up doing something you couldn't be able to do or didn't do,
Yeah.
but you were smart enough to see those opportunities and buy them up, why shouldn't you be the market leader?
I've got
You
a question
should.
for you, mate.
Yeah.
How do
Okay,
you,
fair point,
How,
fair
how,
point.
how do you expect these big legacy banks to keep up with the times organically?
They've got the financial muscles to actually build organic businesses.
To
you
build
know?
organic businesses?
Yeah. Build organic businesses
Yeah, I mean, they
because
don't have shortage of resources
Right.
to hire the best.
I don't think
people.
money is the point I was trying to get at. I just think like having a big player trying to move too much as a big player, lots of stuff is going to break. I think that's when now you have, as far as growth is concerned, you have inorganic growth. And I think like this is where it comes into it.
No,
and
but
now,
you
if
can-
you want to take that away, what are you doing?
you can separate the business, right? I mean, you can grow this thing separately. I mean, look
Yeah.
at Discovery.
I was about to say.
Yeah, Discovery has separate management for the Discovery Bank, right? You hire prominent people, competent people to actually drive that kind of market you want to enter in, right? Separately.
Down
So I
with
think for
overregulation. I'm
me-
sorry. I'm so sorry. I can't see your vision, bro. I can't see your vision.
I think for me, it's just, I just know that the bank have the financial muscles to actually buy anyone and
Yeah.
everyone they can, right?
Yes.
Whoever they think that is a threat to kind of eat a slice on their pie, right?
Not a threat or an opportunity for them, right? That's how they see it. An opportunity.
I guess so. But
Yeah, I think like maybe there's a difference in philosophies here, which is fine. But yeah,
no, I'm not really I'm not really against the acquisition strategy as an element for growth. I'm really not. I mean, if you can't build it yourself and there's something out there that you can actually do, sure. I mean, we've seen with Mr. Price, right?
Yeah.
They've gone and bought Studio 88.
Yeah.
They've bought Yappy Chef. They've got, so whether or not those businesses will be successful is a different conversation. But I think because they wanted to enter into like a more medium to upper market, they bought Studio 88, Yappy Chef. Those kind of captured that upside of the market that they've not been participating in, right? And there's no need for them to build a Mr. Price luxury of some sort. If there's something out there in the market that needs the capital, right? I'm not against that.
You just want more competition for the benefit of the people.
Right? Right.
A bit of a socialist.
Yeah.
Look,
but it's okay. It's okay. I think like maybe getting too much into economics and philosophy. Maybe it's okay to also have a few players. That's how a market is formalized. If it's too much competition, then it all goes down to chaos. But I think just moving a little bit further, you also mentioned TFG, and you also commented about TFG as well. What was your investment case?
Yeah, I think TFG? for TFG it was a valuation call as well. Okay. I mean, it's still red.
Yeah.
Still red.
When did you get it?
I don't know exactly. I can check. I don't know exactly, but I think it's a valuation call, and I think TFG has a lot of interesting things at play. I think they're also like retail in South Africa. I think they one of the strongest players.
Right.
I think there's a lot of things
on
that
the apparel side.
on the apparel side. Yeah, and I think there's a lot of things that they're doing just like manufacturing locally as well, which I think is helpful in terms of like shortening, just that
lead
supply
times.
chain and exactly.
Correct.
And I think in apparel retail, like managing stock is, like top 5 most important things to do. I think they do that really well. And I just think it was, like very cheap when I got it. And yeah.
But I think even them, they've been on a very
acquisitive
streak. Because I think, and I think I don't see the vision of what they're trying to achieve, to be honest. Especially on the furniture side, there's a lot of consolidation that they've been doing in terms of buying. I forgot the names of those luxury brands, but I'm just like, what are we trying to achieve here? I mean, return my money as a shareholder if you don't feel like you don't have any, if you got nothing to do with it, like, give me a special dividend of 40 Rand, like.
I guess. But like if growth is there to be gotten, go for it. And if management feels, we've been a good retail operator and there are businesses out there that we could, get synergies and get value out of.
And how it's online play? Bash, what are your thoughts on that?
It's not the best.
It's
terrible.
terrible.
Not the best. I mean,
it's terrible. I'll go right out and say it's terrible.
It's not the best. Like the next best comparison is like Superbalist, like part of Take a Lot, where like delivery is very quick, 2 to 3 days, or even following day delivery. Whereas I think the Bash system is still like, I remember the one time I ordered something off of Bash and it had to be sent to Cape Town from the store in Mainland Mall in Victoria.
Hectic.
And it's just how, like, do you know what I mean?
Yeah.
And so like the logistics cost of all of that can't work out.
Yeah.
But I think there's a lot of things that they can do within the business to like increase margins and improve profitability. So I think the valuation is still very complicated.
Fun fact, the guys are building Bash are the founders of Superbalist.
There you go.
Yeah, but I mean, yes, they can be very technically savvy in terms of building something, but the requirements come from management, right? In terms of what the platform is going to look like, what do we need in there? I feel like that consolidation of all the brands in one thing for me was the biggest failure. It's very difficult to navigate on the TFG platform to kind of find, okay, now I need to freaking find Total Sports, I need to freaking find all those things. I just find it not user-friendly to me.
But isn't that, what, like, that's what Superbalist is, right? Like, on Superbalist, you get all sorts of things. You get home, you get sport, furniture,
Yes, but in terms of navigating the site, I mean,
Sure. So you
something
think
has
that
to
the
be.
platform is
I
not
feel like it's not
user-friendly?
intuitive at all, and that matters a lot on
Yeah,
users,
fair,
right?
fair.
And that is not what's coming across on the TFG platform
Yeah.
Cool.
Yeah.
Now,
No,
for
all
me.
good. All good. What's the last company that you said? It was TFG.
She's got
Richmond.
quite a bit of companies.
Richmond. Let's get into Richmond. I'm excited.
No,
now.
I mean, I think luxury
Yeah.
businesses is what is like they're phenomenal businesses.
Awesome.
And it's all about brand, right?
Yeah.
Like these businesses have just out of this world margins. Like on a EBIT, like after tax like
Yeah.
it's incredible. So I always say, like, I'll never buy a luxury bag. Like, you'll never catch me with a Gucci or Louis Vuitton.
Yeah.
But I will certainly buy LVMH. I'll have it in my portfolio. Yeah, I think they just, because of the type of customer that luxury brands serve, even in sort of more difficult macroeconomic environment,
Quite right.
they still perform well.
They perform very
because they serve like a wealthy customer who is unlikely to be impacted by a little bit of
A
high
slight
interest
move
rate.
in
Yeah.
inflation and
Exactly,
stuff
exactly.
like that.
You're quite right.
I think that's one of the point that we actually
Yeah.
mentioned,
Yeah.
that
Yeah.
luxury businesses have that benefit, that
Yeah.
the
Yeah.
customer base that they serve is a little bit resilient to market
Yeah,
movements,
exactly.
right?
Yeah.
So
Yeah.
Mate, you said something quite powerful. And I think I'd like for you to just expand on that. You said that you're not going to really buy a Louis Vuitton bag, but you will have Louis Vuitton in your portfolio.
Yeah.
I think that is powerful because a lot of the people, it's difficult out there.
Yeah.
They don't have money to buy a bag like that. But
what's like the average price of an Louis Vuitton bag?
There's levels to this. Like, you can get a bag at like 50K, which is probably like
Entrance?
entry level, and you can 100K, 150.
and then the share price of
whatever.
of what's that company? LVMH.
I don't know what
But
it
it's
is
significantly
today.
less than 50,000, isn't it?
You can, like, with easy equities,
Yes.
you don't need. You can buy like a part of a share, like you don't need.
Partial ownership.
You don't need even
You
if
don't
the
need-
share,
you
like
don't
even
need
at
a
the 100
big-
grand, you participate.
I absolutely
or
love
whatever.
that. I like that's the message I'm trying to drive home to investors in that, you don't have to have 50,000 rand
100%.
to participate in the LVMH
Yeah.
movement.
Yeah.
I absolutely love
So you can you basically what you're saying, you can participate on the golden cycle that is incented by just buying a share of
Exactly. Because
right? You don't
every-
have to queue at Gucci
exactly
and stuff.
because every one person that walks into LVMH, that's money in my purse,
Fair enough.
Which is
No, man.
which
Give me a
is
high five for
which is
that. I love
interesting. But hey,
I love
man,
that.
listen,
Yeah.
people must buy their luxury bags. If that's,
Yeah, I
if
know.
that's,
They must. No, you wouldn't buy the share if people are not buying the luxury bags.
Exactly,
So they must buy the luxury
exactly.
bags. I'll buy the
Exactly.
share.
It's actually it's actually quite interesting. There's Hermes. I don't know if you know Hermes. Yeah.
Yes.
There's like this podcast on whatever these platforms.
Yeah.
Called Business Breakdowns, and they did one on Hermes, and and then I was talking to this other analyst who looks at luxury bags, but basically she was saying, like, to get an Hermes bag you have to apply, like
Wow.
you submit an application, and so she was saying in the UK in London there's 3 Hermes stores. They get like 100 bags a month across the 3 stores, but there's like 3,000 applications every
Jeez.
month coming in for bags.
The exclusivity.
And before you buy a Hermes bag, like, you have to buy other like Hermes products, like you have to buy a scarf, like to build up
your profile.
your profile within before you get
so
approved.
it really is elite, eh?
So like, what kind of business has that type of supply demand and no balance?
It's
anyway,
yeah. I mean, there's just some businesses that have built that that elitism,
Yeah.
right? If that's a word,
It is. It's a negative connotation, but like, yeah.
right? That like you feel like you're part of something great
Yeah.
when you buy the product,
Sure.
right?
Sure.
You feel like you're this, I don't know, exclusive member of this club that you really need to do something special to be in.
Yeah.
And the only thing that actually gets you in there is money.
Yeah.
And we forget that.
Yeah.
Quite right.
Isn't this one of them?
Of course it is.
It's falling.
Of course it is. I'm sure you pointed. I didn't see what you pointed, but you probably pointed at your
She
Apple.
pointed
Yes,
at Apple.
at Apple.
I
No,
think
of course it is. I followed a little bit of Apple as well.
they're quite behind with investment on the on tech and all of those things,
R&D
R&D.
and all.
It's even the features, man. Like an Apple phone is so far behind compared to their peers, like a Samsung, whatever phone in terms of features.
You have an
Right.
Apple, don't you?
I do have an Apple.
Yeah, no. I feel like his debate was just reduced by that one
But
question.
nonetheless, I acknowledge the fact that other manufacturers do have a far
edge.
advanced technology
But-
than Apple.
100%. You
Yeah.
can say that, ne? But it's brand.
Yeah.
Yes.
It's brand.
Yes.
And
Yeah.
I'm going to buy an Apple because it's Apple. It's
Yes.
like, it's brand.
Yeah.
And these luxury and Nike and it's all just brand.
Yeah.
You can
No.
buy a quality shoe at a fraction of like whatever Jordan sell for thousands and thousands.
right, yeah.
You can sell you can buy a quality shoe for less than that, but
Yeah.
you do it because of the brand.
Quite right. I follow watches. You know.
Yeah.
I'm a watch guy, and the best watch are not necessarily the best watches, as far as complications are concerned, are not necessarily the most expensive. Sometimes.
Yeah.
Like the most expensive, you'd find out that it was a Rolex that was sold in auction
Yeah.
somewhere in New York. But then, if you look at a fraction of the price, you could get an IWC, which is owned by Richmond, but an IWC, which is so well made, and the complication is so, and the movement is so pristine. But because of that perception is reality when it comes to brands. That as long as if it's perceived to be like, listen, I'm buying a lifestyle here. I'm buying something that will make me feel, I don't like using the word elite, but I think that's what it is. And I think it's the same thing with Apple as
Yeah.
well. So I don't think we should measure it as far like, okay, features you're behind. It's Apple.
No, but my thing is that's a risk, right? Especially on a tech side, right? That you can't depend on just the brand forever, because if tech is advancing and you're literally lagging and lagging,
But
and
it's
lagging,
margins,
it
mate.
will catch up with you.
But it's
No,
margins.
it may not be now. I agree.
It's
I agree.
margins, yeah.
But it may not be now. But I feel like it will catch up with you. You know, and just on the watch side, right? Like, I think one of the interesting thing about this luxury goods is that the second-hand market is as equally as good as
don't get me started.
as
For
the
some of them.
Don't
Yeah.
get
Some
me started.
items.
'Cause,
For
like,
watches.
Yeah.
watches,
Oh my
even LV
goodness.
bags and all this stuff,
Oh,
right?
Okay,
My
but
goodness.
you won't sell an LV bag at a profit. But you're gonna
Fair
sell a
enough,
Rolex,
but
you're gonna sell
you
a
can
Rolex,
sell a
at
Rolex
times.
at a-
three times.
Yeah.
Three
Yeah.
times for how much you bought it.
So it
Yeah.
depends on the item.
But I mean, you can still get a sizable amount of money from
yeah,
even the
yeah,
use.
yeah.
I mean, you're factoring the
Yeah,
use, right?
yeah.
I mean, if you've used the bag for
You
quite
can
a
have
bit-
a Rolex for years and sell it at a profit.
Agreed.
Yeah, and that's because of the supply demand like mismatch. They
Yeah.
make so few watches to keep it.
to keep the second-hand
Elite.
market.
Yeah. No, I have a big problem with
Exclusive.
Rolex. I have a huge problem
What's
with
the
Rolex.
problem?
No, mate.
they're cutting the supply.
Wait, what's
so
the
that they
problem?
can-
It's
I think it's
frustrating.
perfect.
Well, okay, for watch people, I think it's maybe for investors and all that stuff. But if you're in the watch world, you do get a bit frustrated because you really want to not only own it, which is primarily what you want. You want to own one of these things because like you covet it, you know all the specs, you know all the complications and then you see that this company actually could make more. They're just not making more because of their money. And then I'm just like, okay.
But don't they have like a
difficult.
huge cash reserves? I mean, I haven't looked at Rolex at all because I think it's private.
Not even
right?
private. It's an NPO.
It's an NPO.
Yeah.
Yeah, but I think they still got quite a big chunk of cash reserves, right?
Yeah.
Just like Apple at some
It's
point
painful
in their
now.
lives.
Yo, guys, I'm triggered now. Yeah.
But
Yeah,
nonetheless, you cover industrials, and I didn't hear any company from industrials.
No, I guess a lot of the industrials that I do cover are like small and mid caps.
Okay. So not like your Bitcar.
No, I
not
don't
like
cover.
your,
Yeah.
Bidvest.
Not, but yeah, I don't. No, I don't.
Okay.
I don't look at those, and I guess the liquidity is just a little bit smaller. And if
for
I
those,
want exposure, I'll do it through our unit trusts and
Okay.
and that.
Unit trust. Can you just get into that a bit? How important is it to have not just only shares, but also invest in unit trusts.
Yeah, I think I do because it gives you like diversification.
Yeah.
Like in your small portfolio, you're gonna have what, like 10 stocks or something like that, and obviously like you've got a lot of bias in choosing your stocks. You choose
Yes.
stocks that maybe you know or you like, and not necessarily those are going to be the best performing stocks. So I think it's nice to be able to leverage off of like actual professionals' knowledge on resources, on financials, on whatever industry, and to get that exposure through unit trust. Yeah, and I think it's nice. Like it's been made a lot more accessible now, where a lot of like the investment houses, you can do like a monthly debit order of
Or 500
500
bucks.
rand, exactly.
I started mine in varsity.
Exactly, stuff like
Varsity,
that.
hey?
Yeah, I started mine in
nice.
varsity.
Smart. But yeah, so it makes it accessible. And like if you don't know anything about like looking at businesses, analyzing businesses, understanding valuation, like that's an excellent way for you to, start investing. Yeah, so that unit trust I think form a key part of my
Unit trust,
overall portfolio.
unit trusts or ETFs?
Well, unit trust, but you can it's the same sort
Yeah.
of.
No, I'm saying, which one do you prefer?
I don't have any ETFs. I don't yeah. I mean it depends on your sort of your views on active management. Like, do you believe that analysts are like superior stock pickers? I think we are. Otherwise, I'm out of a job. If you feel that analysts can't add any value, then 100%, like, do an ETF. But I think we can add value. You don't think? Oh my god!
Yo.
No. I look, I believe in active management. I really believe in it.
Do you believe in the fees though?
That's a different debate. That's a different debate. But I mean, I believe in fees to a certain extent you deliver in performance.
Yes.
Of course.
Right? But if you're going to give me subpar performance that is even below like a JSE all-share index, then what the hell am I investing with you?
But I think I agree with you.
Yeah.
However, I think people get so, and I mean, we're all like, I do it. You look at your statement, you're like, damn, like this year's been rough, you know, and then you're gonna be upset about the fees. But like in the year that they delivered like 7% alpha, nobody was crying. Do you get what I mean?
Yes, fair enough. But I mean, I pay you to do that.
Yes.
I can't celebrate you
I mean,
to do your job.
I was like, why are you
I can't celebrate you to do your job.
Yes,
you
but
know?
like the markets are,
No, you're right.
Present performance, not an indication of future performance.
Fair enough, but I'm paying you to beat the market.
It's also like sometimes there are just exogenous events that are outside of.
Yeah, fair enough.
But 100%, I
look, but I think for me it's I don't only just look at the 12 months performance. Obviously, like I look at what you've done for me in the past 3 years and what you've done for me in the past 5 years.
Yeah.
I mean, if you've got an excuse for 5-year performance,
oh no, then you should find a different manager.
Then you're not. You're
then
not
you take your money and run it now.
Investors, the reason why this conversation is a little bit more robust than others is because fees is quite sensitive. And if you want to look at us having a full go on fees, look at episode 6. I think it was episode 6 when we had a go.
5 or 6, I think.
It was 5 or 6 when we looked at
we really
fees.
delve into the fees.
Into fees. But it's always going to be sensitive.
And the hidden complicated formulas for calculating fees. Because effectively you end up paying quite a hefty amount of fees. Yeah, I think we've kind of hammered and kind of also delve into the discussions that I think there is an activist investor as well from the UK that we spoke about when he was breaking down performance fees in other markets versus in South Africa, etc. So I think we had quite an extensive discussion on fees.
Interesting. I'll check it out.
Yeah. Don't come out upset.
Hey man, it's No. I think it's fair. Like if you're paying any service provider for any service,
exactly,
and you feel like you're not getting your money's worth. It's definitely a conversation to be had.
But maybe to wrap up, right? I mean, I'd like to hear, one, do you have well, you're a professional investor. You've got a methodical approach to investing, some of which you've called valuation call, some of which
Yes.
it's a business case.
Yeah.
You believe in the growth of the business.
Yeah.
So I'm not going to ask you what your approach is and strategy is, because I mean,
Yeah.
but I think, are there any other asset class that you invest in other than
Equities.
equities and unit trust that we've touched on?
Yeah. Yeah. So I mean, I think diversification is your friend. And yeah, a lot of my assets is equities, either unit trusts or shares, but property as well. Yeah, so that's something that I'm trying to do, like rental property.
Fantastic.
I guess it's nice because it gives you sort of annuity like consistent income, depending on where you are. So sort of my
So that means probably long-term rentals.
long-term rentals, yes.
Okay.
Not
Because I
not
had
like
a debate.
Airbnb.
I had a debate with Nana about
Okay.
long-term versus short-term
Okay.
rentals. Yeah, I was like, I really don't believe in short-term.
Well,
It depends where you are.
Yeah, it
If you're
can
in this city,
Depends when you are. If you're in Cape Town,
yes,
fair enough,
yes,
right?
yes.
You can have 6 months of silence, and in December or whatever, then it booms.
Make
You
it all
can
out.
make it
Yeah,
all out
you
and
do.
pay your fixed costs
Yeah.
and whatever. But
Yeah.
correct.
for me, that's very risky.
It does depend on the location. I think it's important whenever you're buying properties, like can I be able to get someone here, a tenant, in a short amount of time at a good enough rate? And I think for me, like a area where you can is like student accommodation,
Yes.
or areas close to universities.
Correct.
Like there'll always be demand.
Yeah.
You're gonna always get a tenant in there. So that's like one of
But the
an
value,
area that I've been
the
looking
property
at.
values in those spaces are like skyrockets.
It depends.
and
In
all of
Cape
that.
Town, 100%, but
Yeah.
in Gauteng, like Pretoria,
Johannesburg.
Joburg, I think there's good opportunities.
Yeah, fair enough. I think I'm not really much bullish on
not, eh?
property per se, but I am invested in property. But I'm not really like that bullish about it.
Yeah.
I think the returns are slightly low compared to other spaces. That's just my opinion.
Other
And-
asset classes.
yeah,
And I
that's
think
just my
it's-
opinion.
It's very long term. So it's not
Yeah.
going to be like shares where you in 6 months you can have like 30% up. Like that's not going to happen.
Yeah.
It's very long
Long
term.
term.
And if that's, you know what I mean? Yeah.
And I'm more of I need my cash flow.
No, you can't. Absolutely not.
There was a whole episode where we're
I
just speaking
need my
about
cash
dividends
flow.
because
Yeah.
he enjoys his
You want
cash
your
flow.
dividends.
Yeah, I mean,
Yeah.
I do have stocks that are dividend play, right? It's a dividend strategy.
Yeah.
Yeah, because I need my cash flow.
No,
Fair,
we
fair.
hear you. We
Okay.
hear you. Have you personally? Have you done any fixed income investments?
No, not
Not
personally.
personally.
No,
Yeah.
no.
Just
but I
professionally.
do. So you can like invest in a balanced fund which has different asset classes.
Yeah.
Yeah.
That's like
Balance
same
funds,
concept.
that's very conservative, like low risk
No.
within.
No, I'm just saying if you want, I do have balanced funds. Like not every, you know what I mean? Not,
I wanna
it's
get
not
to
So
all
what would you
equity.
say your risk tolerance is? Like, are you more aggressive?
I think I'm a little bit. I'm probably more conservative.
Okay, so
Right.
So in my personal sort of portfolio that I run, I probably take a little bit more risk.
Yeah.
But it's not like a big portion of my
Your
sort of
investment,
portfolio. In the portfolio that is like, that serious money you're trying to save for the future.
Yeah.
I think I'm conservative. Yeah.
I think
Yeah, I
personally
can
for me, I'm neutral, leaning to aggressive. Yeah.
yeah, I think I'm also like that, because I think most of my portfolio is steered towards equities,
Yes, mine too.
and steered towards some venture capital that I'm
Hectic.
doing.
That's extreme.
That level of extremism in terms of risk,
Yeah.
right?
No, it's
But the
positive.
returns as well, I mean, you're not always going to get it right, but I mean, when you get it right,
You get it right.
you know you get it right.
Yeah.
you know?
No,
So-
Fair enough. Yeah.
So I think I'm a little bit aggressive than an average investor.
One more question on my side for Boitumelo. Okay, maybe it's a bit of a two-parter, but the first part is what are you thinking about in the future as far as your portfolio? Are you going to go into different asset classes, or are you going to continue or you're going to double down on what you currently have? And also, what would be your advice be to someone who's never invested? It's This is still a space for white people. This is still a space for people who have degrees. Just those two questions on my side, and then I'm done.
I think there's a lot of room to grow in my personal portfolio. There's a lot of opportunities that I see, and just a lot of where I'd be very interested. Like the telco space, your MTNs, I think there's lots of value there. Your multi-choice, I think, could be very interesting. NASPAS, you just sort of wait for an opportunity to participate.
Oh goodness!
And I think as well, outside of South Africa, there's a lot of opportunities. Like before this, we're talking about NVIDIA and man. So that's sort of what I'm thinking about now.
Cool. And then any advice for?
Honestly, just start. Isn't that what Warren Buffett said? Just start,
Yeah.
And I guess it's hard without any knowledge in the beginning to start, but I think that's where trusts are so useful, and you get an opportunity even then to engage with professional people who are willing to sit down and explain to you and talk to you. I think just start.
Fantastic.
Just start. And even Easy Equities is also a very useful app, I think, and it allows you to build a paper portfolio. You don't even need to have money, right? You can just select stocks and follow them and see how they do, and I think that gives you a little bit more confidence and say, oh my goodness, I put this in my portfolio a month ago. Today it's up 50%.
Yeah.
If it was actually cash, my
then
gosh.
you would be.
Fantastic.
Yeah.
I remember those demo things.
Demo accounts.
I grew my thing by 500%.
And you're like, what?
Why didn't I just put my money in it?
Yeah.
But I think last question from me. We've touched a little bit about it on our various episodes. I think, Nico, maybe you can start. What was your worst investment? What was your best investment?
I'll start. Best investment, Sassol. Yeah, easy.
Which cycle was it? Was it the COVID cycle where it went literally?
When it bottomed out at 20.
You see, when I introduced Nico, I said he made what?
No, but it
And the other day he came wearing a Sasso worksuit as well. I'm like, is this what they do when you make billions on them?
No. But we did make some money. But I must say that it wasn't just me. I was investing with my little brother. That was the best. The worst, I think the worst, let me not say the worst investment decision was jumping out as soon as when COVID broke out of some of the assets that I had.
Yes.
I got scared and I jumped out.
But
yet the recovery, I was like, Lord Jesus. So that's the worst I've made, is that I was a very irrational.
Massive
I was scared.
sell-off.
Fear.
It was fear.
But there was massive sell-off during that time as well in the market in general.
Yeah, but you could have doubled down and come out of it.
Yeah.
Smelling like roses.
Exactly.
Yeah, but that's me.
Yeah. I think my best has been Capitec.
Yeah.
Fantastic.
Yeah, I think that's been my.
Was it
the
also
biggest
around the time when it went
contributor? Yeah.
down? Okay.
Yep. So it's been very good. And then I think my worst was Bitcoin.
Hectic.
No, and I'll be clear. I didn't lose money.
Yeah.
I didn't lose money, but I just went into an investment that, to be honest, I did not understand.
Yeah.
And it's like, you shouldn't be putting your money in, you shouldn't be behaving that way with your money in something where you don't understand where the value is or why the value, you know what I mean? So that, I mean, I didn't lose money, but I'm good with crypto.
I think Nico, you and I should pat ourselves on the back that we've dished out so many insights that even Boitumelo that has never listened to a podcast literally is echoing.
That's it.
Like, don't invest in something you don't understand.
understand.
If you can't understand the business, don't invest in
Don't
it
do it.
because you don't understand how they derive value,
Yeah.
right?
Correct.
But with that said, I think my best investments were the two ones that you guys made, the Sasso and the Capitec during that time. And then my worst investment was Steinhoff.
Yeah. Oh, hey.
No, you
There
know
I
what?
lost
Yo,
money.
Yeah, you
wait.
know what?
Lord God Almighty.
There I lost
Yeah.
money. Like I was like,
Yeah.
there's no, there was nothing I could do.
Exactly.
Right.
Yeah.
Yeah.
But nonetheless, I think this has been a very interesting
It's been
discussion. It's been
Awesome.
amazing getting to know your insight on how you think about investment and the likes. I think anything from your side, my dog. I think I wanted to bring in a gift, but I think I'll just send it.
No, cool.
I wanted to just get understand, how do people get access to you? Where do they follow? I heard you got a YouTube channel.
I've got a YouTube. I think it's called Boitu M. I'm so bad at this. You'll link it down below, won't
Yeah,
you?
yeah, we'll
yeah,
put it
exactly.
down on
We
the
will.
link. Yeah.
We will.
And Instagram, I guess.
LinkedIn?
Boitumelo Mahudu on LinkedIn. Yeah.
Awesome.
Yeah.
Awesome.
Thanks for having me. This was fun and interesting.
Yeah.
Yeah, I think you should do more guest conversations.
Yeah.
Yeah, we
I
definitely
think that
will.
would be interesting.
And of course, you are our first guest. And if
First
you're saying that, it
guest.
means we did something right.
yeah,
Right?
Yes.
that was good. I think it's
Yeah.
it's great what you're doing. So
All right.
keep it up.
Wonderful. From us, Investment
Yes.
Candle, please like, subscribe, and comment and send those questions if you have
Booyah.
any. And and we'll see you on the next one.
Booyah.
Cheers.
Booyah.